0.5%. Overall, markets showed cautious movements with a mix of gains and losses. For more, we're joined by Nadia El-Balassi. She's Equiti Group's senior market analyst. Nadia, now markets have had a very volatile week. What can we make of this?
Good morning, Taiba. Yes, indeed, we've had a very volatile week. We've had two interest rate decisions. The Bank of India cut rates for the first time in 5 years. This has been massive. I think this move was triggered because foreign investment has reduced in the fastest pace for 6 years now. Also, the projections for GDP growth has reduced or has been lowered from its initial forecasts for the second time to 6.5. Now we're expecting growth to be around 6.2 to 6.7. This has been lowered for the second time, so I believe that this is the reason that they cut rates. And now all central banks around the world have been reducing or going to a more accommodative policy stance, and I think this is going to regulate the systems more efficiently. This kind of change is after a very aggressive or restrictive policy since Corona and since 2020. So I think this is something necessary for growth and for a GDP to continue on rising, and this is why we're seeing this happen.
Now, what about Japan? Despite Japan's strong household spending data, markets declined. What's driving this disconnect?
So with Japan now, we're seeing inflation on the rise again, but the main problem is that wages are not growing. Yes, we're seeing a little bit of an uptick in household spending, but we've also seen factory orders hit its lowest pace in 8 months. So there's still a bit of an imbalance between economic indicators, and this is a bit worrisome. We're also seeing the only bank that's hiking rates is the Bank of Japan, and the USD JPY as well is seeing a little bit of volatility. We're hitting 151 right now against the dollar. I think the yen is rising a little bit after the Bank of Japan's initial rate hike after 17 years of an accommodative policy. I think that we're going to see more rate hikes. Maybe we're going to see one in March. The more that we're going to see rate hikes, I think inflation is going to be a little bit reduced, but the main issue will continue to be wages. Because the Japanese consumer is struggling to pay or to consume enough while everything is super expensive, but the wages are still not growing as fast enough.
Okay, Nadia El-Balassi, we will have to leave it there. Thank you very much for your analysis.
Thank you, Taiba.
Now